Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Monday, January the 9th, 2017, and this is the Daily Report for Gold and Silver. After showing a nice gain last week, but a sell-off going into the close on Friday, we do have gold getting back those losses, currently trading up about $8.50 when we look at COMEX gold at $1181.90. The key today is to look at the low, which is $1172.20. We'll cover that, of course, when we pull up our first chart. And the high on the day has been $1186.40. So we are closing about mid-range on the day, and we're closing with a nice solid gain for the day. Silver also trading higher on the day, closing up about 8 cents. 1660 is the current COMEX futures price, putting it up about 0.5% on the day. And the low today has been 1645 with a high of 1673. Of course, a weaker U.S. dollar did contribute to the gains today in terms of gold and silver, precious metals complex as a whole, as seen by the dollar index, now below 102 at 101.98. So just a couple of ticks under that 102 mark, but trading lower nonetheless, off about 0.25%. And U.S. equities and that elusive Dow at 20,000 seems to be further and further away, with the Dow closing off about 76 points at 19,887. About the only thing to show some good improvement was the NASDAQ. NASDAQ actually closing at a new historical record high. Time permitting, we'll certainly want to look at a NASDAQ chart today. But first, let's take a look at some of the precious metals in terms of activity through the eyes of our charts. So traders, the first chart that I do want to look at on today's show is going to be a daily chart. COMEX futures, of course, gold. We have a nice gain today, as I said, approximately $8.50, about a 0.75% rise on the day. And what is most important to me today is not so much the high or the net gain, although that's critical important, but it is the low that I am really interested in, because what it shows me is that now we can see that since the breakout that occurred last week, in which the market moved well above 1172, that of course being Thursday of last week, we gave up a lot of those gains, about $10 worth on Friday. And you can see that with this red candle kind of lumped in the middle of this sandwich here. But then today we opened just at or below the close on Friday and closed above it. Of course, that is an engulfing bullish, but it's an engulfing bullish after a defined uptrend. So we don't look at it the same way as we would an engulfing bullish that occurs after a defined downtrend and look at that as a key reversal. In this particular case, it would appear to be more of a continuation pattern than anything else. But the key right now is that I do believe, at least on a technical basis, we have formed some real support in this area, one. And then more importantly, it gives us credence that these lows that were achieved really, again, at the end of last year, beginning of this year, although this year is just getting started, do appear at this point to be the conclusion of this protracted sell-off that we can really see hit that double top and began roughly at the beginning of August of last year, culminating on December 15th, and that's when we hit these lows here, and those lows came in roughly at 1123. Of course, the 75% retracement was really a line in the sand, because our current model was under the assumption, or is under the assumption, I should say, that the big move that we saw last year was an A wave. This move down has been a B wave, and we are just at the beginning of some sort of a C wave. And that really excites me, because a C wave should take us at some point to highs above the highs that we achieved last year. And so traders, as you know, when we did issue a buy signal in gold, we issued a buy signal also in silver. We are in roughly at this area. Current market pricing is 1661. And much in the same way that we did look at the gold chart and that 61% retracement, we are also seeing that the market, this is a weekly chart by the way, but that what we have witnessed today in terms of a market move had a low that was above a 61% retracement point, and it closed well into this field here, which tells me that like gold, we can look at a strong level of support at approximately 1645, and we can also look at this most recent bottom here as the conclusion to the long sell-off that really began also June and July of last year, culminating in mid-December. So traders, interesting action in other markets that we do look at. A dollar index off about 0.25% today. As we said on the onset, 101.98. We're looking at a weekly chart, and we talked about this last week, but it's becoming more and more apparent that we hit a brick wall in terms of technical resistance just before 104 on the dollar index. We can really see that on this weekly chart in that the last month had highs that were right around 103.60, 104 in that area, but the bodies, all the real bodies closed well below that price point, as you can see here. Last week, we closed near the lows of the range over the last month, and then, of course, today is just it is still a single candle on the weekly, but it only represents 1 day in trading. We do have a lower close posted. Now, where can we look for some potential support? If we continue to see this market under pressure, I would look at about 101, 100.86 to be exact. That is a 23% retracement, and that is a pretty large retracement sequence. Let me go ahead and compress this so you can see where this comes in from. But what we're looking at is a retracement, which is roughly from about 75 up to these tops at 103.61. And traders, lastly, I do want to take a look at crude oil. Crude oil literally falling out of bed today, down almost 4% on the day, a decline of about $2 plus per barrel, 51.87. But look at the magnitude of the move when we look at that on a daily chart. We are now at the bottom of this channel, and the fact of the matter is a break below $51 could easily push this market as low as $50. And realize when I say below 51, I mean 51.87. We could easily see another $2 drop per barrel. And in terms of technical levels of support, we don't really have anything until approximately 49, and that's this series of tops right in here that come in just below $49 per barrel. Again, maintain your current long positions in both gold and silver. Again, maintain your current stop levels. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.